You're starting to see this sector that it's performed exceptionally well since the recession. It was a safe haven. People were looking for annuity-type returns, and as a result, a lot of money flowed into the sector. The unlisted private REITs that raised $8 billion last year, a large number of those private REITs are focused on the single-tenant space. You have single-tenant investors themselves, high-net-worth individuals, that are looking for safe haven investments, and they're starting to put money back into the net lease space. So overall, I mean, we're expecting that it's going to continue to grow in 2011. I think ultimately there's going to be upward pressure on cap rates. It's unsustainable to have the low cap rates that we're experiencing now. We're right now seeing cap rates in the sector that's approaching pre-recession levels. And when you think about it, the reason for that is that spreads over treasuries are still pretty healthy for the banks. They're 300 to 400 basis points, but the 10-year treasury is in the low threes. So once you start to see upward pressure on cap rates, you will start to see upward pressure, or once you start to see upward pressure on interest rates, you'll see upward pressure on cap rates. But it's probably not going to happen for a while. You're going to see a lot more money come into this space for the next 6 to 12 months. I'd say there's going to be a little bit more compression in terms of those spreads that'll hold those cap rates pretty low to pre-recession levels. We did a study going back to early 2000, and we tracked the unlisted, we tracked the REITs that were focused on the net lease space, and on a compounded rate of return, they performed exceptionally better than all REITs combined, averaging around 15% returns. So it makes sense when you think about long-term leases with escalators, not a lot of expenses associated with that in the form of constant turnover of tenants that provides TIs and leasing commissions and the like. And so as a result, you do generally see greater returns in the net lease space, especially if you have good credit tenants that, with a low default probability. There are new folks coming in. We're starting to see a lot of international capital that's focused on some of the larger net lease transactions. So you have that, and you have the private REITs that I mentioned that raised a ton of money. You have single-tenant investors, high-net-worth investors that are looking for that annuity return. They're not ready to move up the risk spectrum. They're looking for something safe. So I do think you're going to start to see a lot more capital coming into the space in 2011. I expect the unlisted private REITs will probably raise somewhere upwards of 10 to 11 billion. And again, a lot of that will find its way into the single-tenant space.